This is the FFR Trading Market Minute, and again, a daily candlestick chart of the SPY. It is a proxy for the overall U.S. stock market, and that's why we follow it week to week. After hitting our downside targets last week, you can see we had a nice rally here. We did fall short of making new highs, and the market has now rolled over, and you can see it's now revisiting some of the downside targets that we had set. The moving average support right here. You've got this gap fill, this open gap between, this was last Friday and Monday. The market is in the process of potentially filling that gap today down to this level here. You do have some kind of trend line, support here that the market's been holding in this uptrend. All right, we'll see if we get back down into these levels. We should be in an oversold condition on the RSI here, which means that that initial leg down here may be coming to an end, and we should get some type of rally here. Now, the bigger concern at this point is we have what's called a Hindenburg Omen. That is a signal that is given in an unhealthy stock market. Basically, in a normal bull market, you would see the majority of stocks making new 52-week highs. In a normal bear market, right, when the market is moving lower, right, you tend to see the vast majority of stocks making new 52-week lows, right? That's normal. When you get a situation where you get an equal number of stocks roughly making new 52-week highs and 52-week lows at the same time, it creates this divergence in the stock market. It's saying that underneath the market, underneath the hood of the market, things are not looking good, are not healthy. So we did get a Hindenburg Omen signal, I think in the first week of November. It does need to be confirmed. Once it's confirmed, then we're on the clock. All the crashes that we've had since 1986 occurred or had a Hindenburg Omen confirmed prior to the crash. There were no crashes during the past 40 years when there was no Hindenburg Omen, right? There was a Hindenburg Omen, for instance, on the clock for the March and April crash that we just had here in 2025. So it's just one piece of a puzzle. I like to look at the Buffett indicator, which is strongly overvalued right now. That's a measure that Warren Buffett uses to determine whether the stock market's overvalued, undervalued, or fairly valued. Another measure I like to look at is the Shiller PE ratio. When that ratio of the S&P 500 goes above 30, bad things tend to happen in stocks. And we are well over 30 by that measure. Now, a quick look at the monthly chart here. You can see that the RSI is definitely in overbought, or was in overbought territory before our correction here this month. But what I typically would look for on the monthly chart was some divergence. So we'd see the market making new highs or higher highs, and the oscillator making lower highs, similar to what we had, here before the crash here in March, April, right? So we had the market making new all-time highs here, but the RSI was making a lower high. We don't have that at this point, but just pay attention. We're starting to see the signs that the market may be overvalued here with the Hindenburg Omen, with the Shiller PE ratio being over 30, the Buffett indicator saying the market is strongly overvalued. You just start putting the pieces together, and you got to manage your stuff, right? Protect yourself from downsides, because we know market takes the stairs on the way up, but it tends to take the elevator on the way down. So things can happen and unravel pretty quickly to the downside. Economic data set for next week. Wednesday is the FOMC minutes at 2 o'clock Eastern, and then Friday, S&P Global Manufacturing PMI and Services PMI. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.